Welcome to the AACFB's 2025 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenter today is Shervin Rashdi from Slim Capital. Slim Capital is both a funding source member and a silver sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Shervin, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit those in the box and they should be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to review this at a later date, it will be posted on the 2025 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I will turn it over to Shervin. It is all yours.
Thank you, Monica, and thank you to the AACFB for this opportunity to sponsor and offer some insight as to who Slim Capital is and what we do. Um, we, I'd like to start with just, we're an independent finance company, and really we look at unique and custom financing solutions. We try to provide service. We try to provide the ease of technology, and we try to provide the right product. So I'll get into a little bit of those here on the next slide. This is kind of the overview of what we're going to be discussing today. So our company, we're going to go into who we are, what we do, give you guys a little bit of those details, run through the programs that we offer, as well as the process and how to submit a deal, get funded, and get paid. So let's jump into this. So people are my passion. It's always been something that I hold true to my heart. I always tell my team that, I feel responsible for them. I feel that it's something that I am entrusted with to give them the opportunity to have their livelihood. And I feel the same way with our broker partners. I feel the same way with our clients. It's really about handling people with the right attention and care. So we have that hands-on approach. We want to be able to offer the most pleasant experience. And so we do that, there's kind of a little bit of a balance because no one wants to have personal care and touch, but not get an answer on or a decision on their deal, or have to call 6 different people just to find out what's going on their transaction or what stage it's in, etc. And so I think over time we continue to evolve to really try to enhance our processes and our systems and really teach our team how we could best handhold and how we could best nurture relationships that we value so much. So, well, we are a national direct finance company. We offer credit-based and collateral-based decisions and programs, and I'm going to get into that a little bit. But effectively, I always like to use the spectrum, and I say on the better credit deals, we offer more attractive financing rates and options, 0 down, etc. And then if something maybe starts to go downstream in terms of credit worthiness, we will roll up our sleeves and get into the weeds and see if there's some kind of structure we could put together and make the deal happen. And I'm going to touch on a couple of those examples and give you some highlights as to how flexible we could be in that sense. So 40 years of experience. So Jeff Brennan and Jeff runs the sales side of things mainly. I run the operational side. And so it's actually over 40, but the other people that we have on have also been in the business for 20 plus years. VP of Ops, our marketing director who's on right now as well, Stephanie Cruz. We have we've seen a lot of things, which gives us the ability to make decisions faster. So you don't get hung up on something where someone gets stuck because they can't check a box off that says, does this need to be notarized or not? Or do we need an amendment or not? Is there a way to get past this part or not? Those usually are things that very quickly take place because of experience, because we have people that have the knowledge base at their fingertips. Transaction sizes 25,000 to 3 million, and we'll get into some of those details in 12 to 72 months. Okay, so the programs. We we have the philosophy of every deal has a story, so tell us yours. And so if you want to first qualify a deal, these are some of the basic questions to ask. So, what is the money for? Is it business use or not? It seems to go without saying, but you'd be surprised some of the requests we've seen. So, we want to make sure that it is for business, obviously. So, how will they benefit from this use of funds? So, will it create an opportunity for increased revenue or savings? So, obviously, if they're buying equipment, generally it's going to offer some kind of enhancement to their business. It's going to allow them to do something more efficiently, or it's going to allow them to not have to rent a piece of equipment, for example. That's where the savings could come in if they're paying on the lease side of things. Um, we also do some refinancing of things, and I'll get into some of that as well. So that's where some of the cost savings could come from. And those are some of the questions to ask. We see some strange things where, someone needs a Range Rover because they say that that's what their clients like to be driven around in. Something, it just needs to make sense. And I think everyone really understands when they hear something, if it does make sense or not. Um, Asking the questions, how's your credit? Most people know if they have decent or poor credit. Did you co-sign for a niece and she got her car repoed? Well, they probably know about that. Does that drop their credit score? It's not just score. I always say that good, there are good 560s and there are weak 720 FICOs. And we've all seen the guy with 720 and he has two credit card trade lines to show for it and not much else. But then we see the guy who's, maybe 600 who has, real estate history, installment debt history, nice revolving balances, and they've had a couple of medical collection issues that just dropped the score, for example. So we'll look at those. We'll look at the quality of the score. We'll look at how their pay history has been, and we'll make a determination from there. Obviously, if they've had, multiple issues and challenges, and it's a recurring theme with tax liens and other judgment type things, we will think twice, depending on the situation. All right, so going into the programs a little bit deeper. So the tier one credit program, again, back to that spectrum I was describing. If you're looking at that, we could say the top tier would fall in this category. Now, this is just kind of that top segment. If we go, it says application up to 300 and 680 plus FICO. It's not to say that if they have higher than that, they can't have a better rate type product or maybe finance for a higher amount, or if they're closer to 680, maybe the rate adjustment. But everything kind of goes through our our proprietary scoring model, and we take various factors into consideration, where it's not just the FICO, the payment history, the comp credit, the time in business, obviously, suits, liens, judgments, bankruptcies, etc. And we put all these in together and come out with what our decision is. I will go into some options that we offer in case they don't make the cut, how we deal with those, and how we could look at maybe getting into some other options for you as well. And the attractive early payoff options, I'm sure you've all been asked, what are the payoffs? We do have some nice ones under this program specifically. Tier two drops the app only limit to about 150,000, but we take a lower FICO. We could lower the term. I'm sorry, lower the time in business a little bit. And again, kind of it's a little medley of how we put it through our scoring. And if it hits, then we could offer the term there. And if it misses, we get a little bit creative there. Um, Tier three then drops to about a 75,000 app only with 2 years in business. And then in those cases, we'll look at some instances where there's some challenges, not egregious, but some responsible. We call them solid citizens. They could come in and handle things and know that they have maybe had some hiccups in the past, but overall they are, solid participants that are worthy of financing. We do startups. We cap out at about 60,000 financed on 75,000 of equipment because we always require some kind of a down on those. So this one would be a 20% minimum down, either as a down or a security deposit. They need to have home ownership, and they need to have 700 FICO. Obviously, it's a higher risk product as a startup, but we do make an effort to really look at these under the light of what their what what is their potential. And so I think something that's very important to include when a startup business is submitted is an executive summary, at least, if not a business plan of sorts, so that we could understand what how much homework they've done, how much they've thought this out. You'd be surprised the things I've heard. I had a bus company lady one time say, "Oh, the first time I saw a big coach, I got so enamored by it, I thought I have to be in this business." And that was about the extent of what she knew about the business. So these are real things. So source and use of funds, very important. I think that that's something that tells us that how much they've put in to their own skin in the game, whether it's their own cash, how much they've borrowed from friends, family, other banks, SBA, etc. Those all paint the overall picture so that we could get a really clear understanding of what their debt obligations are, what they've invested themselves, and how committed to this they are, and how much they've thought it through. So really, when you submit a startup, I mean, on every deal, we like to see some form of a write-up, who, what, when, where, why. That helps us a lot. But in the case of a startup, it's really helpful. And all these forms to help you are also on our website. And at the end, I'll show you there's links and of where to go to. So the forms really help us to give you the tools to put the questionnaire together, to get the information, gather the information in a very expeditious and uniform manner. Um, the banks. So if you're going to have a startup, do you have enough for your working capital to carry you through? Is there enough cash there? These are real things. We can't say, all right, well, they're gonna empty out their pockets to put this 20% down and there's nothing left. So now we're gonna get, an email inevitably the next month that says, sorry, this payment bounced. Now we have to figure out what the problem was. And they said, well, I emptied my whole pocket to pay this down. I don't really have any financial wherewithal to continue until I catch some wind. So those are some of the thoughts there. Cannabis, yes, we do cannabis programs. That's part of the fun of being an independent finance company. We have our own lines, so it really gives us a lot of freedom to decide what works and what doesn't. We understand this industry pretty well. We understand the nuances. We've written articles on it. We've really got our ear low to the ground. We tend to stay in the equipment space, so testing equipment where they have to, there's a lot of regulations that go along in cannabis. The regulations do add more equipment, but they also add more costs. There's regulations, there's taxes, there's a lot of factors that go into running a cannabis business. I encourage you to look, I think the article is on our website too. I wrote an article about lending to the cannabis space several months back, and it really highlights the different channels from growing to testing to manufacturing, packaging, and then the distribution side. So you could kind of understand the entire life cycle of the cannabis industry. And so we found that the retail side doesn't really have a lot of it, think brick and mortar retail. That doesn't really have a lot of the equipment needs, display cases or whatnot for us, POS systems maybe. And then on the growing side, generally these are going to be somewhat of an indoor farm, right? Greenhouse with lights. You need a lot of lights and electricity and this and that. We've only done those with structure, like security, with real estate secured type deals. But we really hang out in that manufacturing space where they're doing the production. And so that's where the testing, packaging, extraction, and weighing equipment comes in. And those are also, incidentally, able to be used for other industries as well. So if there's an extraction machine, that could also be used in the lotion and perfume industry, for example. So it adds a lot of other valuable means for us to repurpose the equipment if need be. It says application only up to 150. We've done much larger, generally with structure. Those tend to be so, and we'll get into some structure type things as well. We did one earlier this year. It was 450,000, I think. And we took property and they were still a little bit short. And I saw in the PFS that they had gold coin collection. And we actually met. I had my bank in Texas. I was going there anyway, and they were in Texas. Met me in Texas, put the gold coins in a safe deposit box, and added that collateral value to the deal. Pretty creative, which is what we really try to do. Um, Restaurant equipment program. So we look at all the tiers, tier one, two, and three. Um, Restaurants, as many of you know, are very difficult in survival. A lot of them have trouble getting past, 2 years, much less 5 years. So as they hit those benchmarks, it becomes a little bit easier for us to get into. Expansions, we've actually surprisingly seen a lot of expansions, and we've been very successful with them this year. Um, and so I would like to open that up, and I think we have one or two examples at the end of some of those as well. Um, we do have working capital programs. The unsecured working capital program, not it's almost something that we added on just to help our clients. So it's something that we don't push a lot, but we do offer it. So if we see some, if you're saying, hey, they're looking for some working capital, here are their bank statements, here's what they need the money for, and here's the application, we will score it through that line to see if it's something we could do. Not something that we, again, do a ton of, but it's something that we certainly offer. Asset-based lending and working capital, definitely a lot more interesting for us. We have seen a lot of folks getting since COVID, um, a lot of free money entered the space, right? SBA funds, EIDL, PPP, all that money came and flooded the businesses. And it kind of propped them up artificially for a period of time. And what happened after that money started to dry up is we started to see a lot of defaults and delinquencies and stress on portfolios. But a lot of folks went back to those wells, the MCA wells, and we're seeing it more and more and more that they tapped into those resources. And it's once again choking out their cash flow and it's causing problems for these businesses. I encourage you, if you see that, if you have a client that has those kinds of issues, I would ask them that if they have other assets for us to consider. So real estate would probably be the easiest one for us. We could take a first or second lien position on a property and refinance. Generally, 3 to 5 year term, and we are saving them a ton of money on that, just on their payments alone. And it really helps revitalize their business. So that's something that we're planning on getting out in front of with some heavier marketing to really push and let folks know that this is an option, especially with the banks recoiling. The banks have really pulled back a lot. A lot of folks have exited or are holding firm, and we are out there active in the space. So I'll explain what hard assets are with a secondary market value. Actually, I could get into some of that now. Really, we're looking for assets that are remarketable, generally 50 plus thousand per asset. So, if we look at a facilities list, I don't think it makes sense to put a lot of, odds and ends and desks and chairs. And I've actually seen floppy disks on facilities lists before, believe it or not, if you recall what those are. But in general, think yellow iron. not over the road trucks, maybe dump trucks, yes. So vocational type assets, maybe. But over the road trucks just fluctuate in value way too much. They depreciate way too much. It's not something we could take as collateral. So. Working capital. So a little bit more on those. Oh, I guess I jumped into that. So this highlights a little bit more. Yeah, construction, demo, machine tools, manufacturing, industrial vocational. So all of those packaging, all of those things will really give us an ability to very easily go and grab. We have a lot of tools where we could grab at market values. If you wanted to, and our facilities list actually asks for year, make, model, hours, or mileage. And then if there's a condition, if you want to offer the condition report, that helps us a little bit too. And just go ahead and if you want to get a head start, just Google some of those items and you'll see some values. Again, we have some more tools that we go into, but you'll start to get a feel for if if the client puts on their facilities list that something's worth, $150,000 and you're not finding any comps anywhere close to 50,000, something's wrong. So just to have better preparation there. And then the real estate. So real estate is a very complicated type of product only because it's not cut and dry where you say 65 to 70%. It really, they say location, location, location. Absolutely. So farmland, like land is not something we really consider, but just if someone's talking about, land or property in the middle of the countryside versus an infill, metropolitan area, much more marketable, easy to turn, that's going to get a lot higher valuation for us and a lot easier for us to get comfortable with than something that's remote and maybe off the beaten path and difficult to value. Okay, so those were our programs process. So I talked initially about the the importance of hand holding and touches and making sure that the people are engaged and service. Part of service I believe is a nice mix and a blend between technology and human touch. I'm not a believer of apps coming in, getting auto scored and auto declined and running out without eyes being put on them. But I also don't want it to sit on someone's desk for an underwriter to look at, maybe today, maybe tomorrow, maybe next week. That's not how we want to get it done. So really, we've done a lot to invest in our technology. There was a press release a few months ago about our AI suite that we've created, and it's a proprietary thing that we built. And so what we do is we're able to take in deals using OCR, and that's basically a technology that can read handwriting typed. So we don't require anyone to go and enter their deal into our portal, although we have that capability. You just send over the application, the way it's filled out. Our application process in a matter of seconds does an incredible job of reading better than a human, capturing the data and putting it into our system, our Salesforce system, generates the lead, makes sure that we have all the information, takes the files, whether it's bank statements, tax returns, equipment quotes, you name it, identifies those, breaks them down into the file folders for viewing, and then it basically kicks out an initial review for human eyes to look at. Sometimes it'll kick something out that shouldn't be, so that's why the human has to look at it. That then gives us so we also have some embedded features that are KYC, KYB. So know your customer, know your business. So they do some fact checking, right? Make sure they go into the various databases and make sure that the information matches, that we have a good history and track, if there's a criminal record or something that we should know about, liens, judgments, suits, all of that then comes under our umbrella. We have technology that reads and detects fraud. We've seen this more and more on bank statements. Please take a look at your bank statements. If you get a chance to see something fishy, things don't, numbers don't align, don't add up. There's, things that look a little bit different in text formatting, etc. All of those are red flags. So not only do we view that as a red flag, we run it through our system, and our system is pretty good at telling us if it's a problem or not. Um, the deal once it's reviewed. So if we have an approval, the approval goes out. Again, it's a digital. Generally, we offer selections. So the approval goes out to the broker. The broker could send the terms directly without their points included. So the approval to the broker has points. The approval to client won't have points. And they could select, the term, and that will then generate, and they could ask for a term sheet, and immediately a term sheet goes out digitally. They could digitally sign, they could upload, if it's driver's license, voided check, whatever else might be needed, and then a doc request is set up. So that part is, there's no printing, there's no signing, there's no faxing, there's all of those days are gone. If there are questions, obviously everyone has a sales rep here that they're hoping to discuss and ask questions about. Um, and so that once that doc request goes, then the docs come in. You're going to be a part of that process. You'll see it. If you have questions, again, we're part of it. Then the funding checklist, digital, you could upload directly to the link that you receive for any items that we might need, and it's a live checklist. So you refresh the link, you'll see what's pending or not pending for final funding. Um, if there's a decline, we if we think that there's a way we could potentially structure something, but that wasn't what was offered to us, we'll look for that. And we have ways of we check a couple boxes, and the boxes basically come out and say, hey, I'm sorry, we couldn't approve this based on what was presented. However, if you think that we're happy to look at this one with collateral, for example. So here's a link to our, facilities list or real estate schedule, PFS, whatever it might be. And you could easily just get those signed to come back for another review. So we try to give a second chance in that sense. Okay, so how do you submit a deal? Pretty straightforward. So the app only 300,000. Little summary. It doesn't have to be a book. Just who, what, when, where, why is always very, very helpful. So we're not guessing. The signed credit application is important. Equipment invoice, and 3 months of bank statements. That's what we need to score those. And then if it's full financials, we need 3 years of financials and tax returns and the interims. People ask, well, if you have the tax returns, why do you need the financials? The only reason why we wouldn't need one or the other is if you have audited financials, then we don't need tax returns. But the reason why we need financials is because there's a lot of details in there when we want to run the spreads and look for debt service coverage and everything. There's a lot of details in there that gives us information to finalize that process, as is the personal financial statement and then the debt schedule. I'm going to say something on the debt schedule. Clients tend to get this part mixed up quite a bit. I guess one quick rule of thumb for you is if they have a balance sheet, the liability section, not the whole liability section, but whatever is pertinent to their debt schedule, should match up same date to same date. So if we have a balance sheet from June 30th and we have a debt schedule from June 30th, that should pretty well align if we have good information. So just a really quick rule of thumb. And here's kind of a visual of the process. So you submit the application along with the quote, bank statements. You just send it into our email address. That grabs it and does the whole thing. You'll then get a digital, as I said, the approval or term sheet, and that'll give you the options to send it directly to the client or talk to them on the phone, pick the term, and then send that term sheet directly to them. And if we have everything, we move pretty quickly to documentation. And then the funding checklist, as I mentioned, comes out with that live link. And then we wire funds and ask for an invoice from you. So That's the fun part. This is just showing you the items that are on our website. So slimcapital.com, under the forms link, you'll see our application and PFS, debt schedule. Um, if you're not onboarded with us, I encourage you to go to the full broker package, which is the referral application and agreement. Stephanie Cruz, who is our broker liaisons on this call, she would be the one that would reach out to you and just get you onboarded. We'll get it's a pretty painless process, and we could hopefully start to get some deal flow going. Um, Okay, so these are some unique things that we thought we'd highlight to just show some of the breadth of things that we could do. Drones. Not many people look to do drones, but this was a company that needed drones so they could do some surveying for map creation. And so we looked at it. We effectively took the scoring model the way we had. They wanted the 260s, zero down. We did a 60-month term, and it was good to go. So that's just one type of example. Restaurant equipment, as I said, we've been doing quite a bit of these. This happened to be a local restaurant here that came to our desk through the broker network, and um, we've actually frequented their current Italian restaurant quite a bit. And they were opening a new location. We looked at the current existing financials and looked at their existing um, track record and went ahead and pre-funded for their build out, and the equipment they were financing had to get ordered. And so that was a nice win. Uh, Cannabis space, so pre-roll machine. Um, this was a cultivation company, so they were actually expanding into their grow facility. They were hand cut, manually cutting and rolling, and this became more of a pre-roll machine. The pre-roll machines are very beneficial to these companies. It really increases their output, reduces their cost and overhead, and we were able to put that together for them as well. This one did have a real estate. No, this did not have a real estate component to it. That's right. We had a blanket lien on. They had built out a beautiful production facility, and we did this one with very limited structure, some down. Um, that's it for now. I've got contact details for you to reach out to Jeff if you're already on board, you want to run a deal by him, or Stephanie if you want to get onboarded with us. Please feel free to reach out. We are happy to serve. And with that, Monica, any questions? I'm happy to answer.
Great. We do have a few questions, and just as a reminder, if you have a question, now's the time to put them in the Q&A box and we'll get them answered for you. The first question is, how would you rank CBR, time in business, and bank balances in terms of strength of the borrower?
Good question. So time in business says a lot. I think that's one of the most heavily weighted. The FICO, as I mentioned earlier, the FICO only really matters if it has depth. No, I mean, it matters obviously, but the depth of the FICO of the credit is more important than the score. So we do put eyes on that. Probably would be the secondary. And then depending on the size, bank statements. I'll tell you, bank statements tell a lot nowadays. Bank statements used to just be back in the days, just send us your first page. No longer is that the case because there's so many nuances and details that we learn from a company, their borrowing habits, their pay habits, their debt obligations. You'd be surprised some of the things people put on their their business bank account that they spend money on. But I had one lady that kept pulling cash out of an ATM at a casino and asked about that, and it was an interesting conversation. So.
All right, great. Regarding startup businesses, is there a deal minimum?
I really think that 25,000 is where we'd like to see that bottom line be. Um, because honestly, if someone's starting a business, anything below that, I'd like to see them put in. themselves to have a chance at really making a go of it.
Okay. Are gambling machines acceptable collateral?
Unfortunately, no. It's funny because back in the day, I was running a portfolio for a company that had a gaming license, and that gave us the ability to do those. Unfortunately, I don't have a gaming license, and so I can't market those.
Maybe that other lady does, and she's she's like,
Yeah. There you go.
um, do you EFA, do you do EFA and leases, especially in California?
Okay, yes. So good question. We do both. We are seeing that people are requesting, the brokers especially, more leases in California, um, to and New York get around some of those rate disclosures. And really, the art of the lease has made a little bit of a comeback. I think I read an article about that recently too, which I enjoyed. But yes, and in terms of the next question would be the licensing. We'd like the brokers in California with California deals to get licensed. If not, we have an affiliate way of doing things where you would reach out and we would see how we could take full control of the deal and still have a way of getting it done for you.
Okay. What are your requirements for corp only? And it sounds like you do cross corp as well.
Sure. Yep. So corp only, the company has to be sizable. That we look for, 30 to 50 employees. We look for some decent time in business. It kind of depends on the tier structure and what their borrowing history is and the size for it to be corp only. Um, because if they're closely held and they don't want to PG, that tells me that they don't believe in their own business enough to put their weight behind it. So that gives me pause to put our money behind it. Um, and cross corp we do, especially as you've probably guessed, the restaurant expansion are generally the cross corp type deals. Should be related ownership, generally related industry. So we've had deals that we've kind of turned away from where, the guy has a concrete manufacturing company and then he moves to go long haul, for example. And that, like, how do those two relate? And what are you trying to do? And how does it serve each other? So, but yes, we do cross corp guarantees as well all the time.
Will you finance vending machines?
No, we don't do vending machines.
Right. Um, this person says, I have a deal with a distributor in the US. Manufacturer is based in Turkey, and the owner has an ITIN. That is why I asked about corporate only.
Oh, got it. Yeah. So we do finance international, but as you can imagine, with the tariffs being so uncertain nowadays, we tend to want the equipment to be stateside before we release funds. So some people are advancing the deposits maybe, and then we reimburse them. We're getting some creativity there. We've seen some. We had a Canadian vendor that we did a lot of deals with, and to kind of work around the tariff a little bit. They created a U.S. entity. They started selling some of their raw materials and products to the U.S. entity and then sold it here, which I figure really serves all the purposes because now a U.S. entity has some taxes to pay, and it made it cheaper for the finance company and the client, and didn't really press on them. So it's nice.
The person said they're going to reach out to you, so they'll get into more detail later.
Okay, great.
Will you consider a co-signer on a weaker guarantor deal?
We will. They should have some involvement, some kind of connection. Family works generally, close family, but also the related to the entity would obviously be the strongest. That's a little bit of a case by case. If the guy is running the business, it's all his own thing, and he's got, a multitude of a history of bad payment history, charge-offs, repos, et cetera. And they say, okay, I've got an uncle that's going to sign for me, and he doesn't have anything to do with it, it might be a little bit tough.
All right. We do aviation equipment, ground equipment, not airplanes or plane.
Yes. Yeah. We did we did during COVID, they had a lot of testing that was taking place. We did some equipment for an aerospace company that was doing parts for the airplanes and another one that was doing the tankers and in-ground items for the planes. Yeah.
I think they need to do more testing on the planes.
That's true.
Um, all right. Give it just another minute to see if we have any final questions. I am not seeing any. So we'll go ahead and wrap it up. I want to say a big thanks to all our participants, especially our valued funding source member and silver sponsor, Slim Capital. Thanks for a great job, Shervin.
Thank you.
We invite everyone to meet with Slim Capital in person at the Commercial Financing Expo coming up this September in Austin, Texas. Thanks again and have a great day.
Thank you.